All right, guys, welcome back to the channel. Today we're going to talk about bond ratings. In the last video, we had talked about the terms and maturity of bonds, but in this one, I want to talk about the ratings, the rating agencies. You know, how do you know if a bond is a good bond to invest in, right? How do you know if the company that you're borrowing your money to is going to pay you your money back? So let's get into that. So bonds get rated similar to how we get a credit score, saying how likely we are to pay back our debts. So you know how when you go to buy a car or house, they pull up our credit score from FICO or Equifax. That credit rating tells the banks how likely we are to pay back our loans. Well, companies and governments also get rated on how likely they are to pay you and me back. So the investors. It's not FICO or Equifax that's giving the ratings, but it's other companies like Moody's, Standard & Poor's, and Fitch. These companies give ratings to big corporations and governments. These credit ratings tell you how likely you are to get your money back when you loan it out. The big three, as they're called, issue a credit rating of AAA or capital A, double A minus as the best rating. Companies or governments rated this high are very likely to give you back your money on time. The worst scores you can get are C and D. Here we have the worst scores. If you see these scores, you're probably not going to get your money back from these companies or governments. I mentioned junk bonds in an earlier video. Junk bonds are generally considered anything below a triple B rating. So anything here or below, this is what we call the junk bonds. So anything below that rating, you start earning higher interest rates, but your money is considerably at risk of not being paid back. So as a side note, the US government has a credit rating of AA from Moody's, which is the highest rating, AA plus from Fitch, which is not the highest, but it's very high, and it has a AA plus from S&P, which again is a very good rating. So what does that mean? That means that in the opinion of Moody's, Fitch, and S&P, you're very likely to get your money back when you loan it to the United States government. This is why the United States government Treasury bill is considered the risk-free investment. So that was a quick little overview of bond ratings and the rating agencies. In the next video, we're going to go ahead and talk about who is the type of person that would invest in bonds. So join me in the next one. Don't forget to hit that like and subscribe button and that bell notification. That way you can be alerted to all the latest videos. We'll see you in the next one, guys. Take care.